Welcome back. This is Unfiltered Forex, here to do the weekly recap for the week ended July 7th. On Monday, we got the manufacturing PMIs, the ISM manufacturing PMI for the USD, and the index was at 46, below the expectation and also below the previous one. Looking at it here, this is the ISM website, Services Management Institute of Supply Management. ISM Services and Manufacturing PMIs, both of them, they're together. Manufacturing PMI here. For now, I think we should just look at them both together. Prices, there are two main indices, the employment index and the price index. The employment index registered a decline of 3.3. Series index for June was 48, while for May was 51.4, 48.1, 51.4. So you can see here, this means employment in the manufacturing sector, the manufacturing sector is declining. Now it's below 50. It means the overall sentiment is negative for employment in the manufacturing sector. Looking at the employment index in the services sector, series index for June registered at 53.1. Series index for May was at 49.2. Percentage point change was 3.9. This is a very high reading, a very high jump, considering that we are expecting the job market to cool. So you can see here, May 49, below 50, and then series index for June 53.1. Direction growing, rate of change from contracting. Yes, it was contracting the previous month. Trend in month 1, just this is the first reading since the previous one that we have seen this growth. Moving forward to the price indices, this is particularly important because next week we get the CPI. The inflation readings are coming next week on Tuesday, I believe, and that's where these prices indices become very important to look at. Okay, series index for June 54.1, series index for May 56.2. Percentage point change negative 2.1, showing the direction is increasing but slower. See, above 50 means it's still increasing. So showing 54.1 means it's still increasing but it is slower. Trend in months is 73. For 73 consecutive months, the prices indices in the PMI, services PMI, has been increasing, as you can see here. Moving on to the manufacturing side, percentage point change negative 2.4. Series index for May was 44.2. Series index for June was 41.8. This year shows that manufacturing and services sectors are registering very different prices. Prices are contracting in the manufacturing sector, prices are increasing in the services sector. That shows that inflation will cool eventually, since all the goods are manufactured in the manufacturing sector, and then the services sector is where retail prices are concentrated at. Retail prices and services prices are highly affected by the cost of goods, the manufacturing. So here, if the price index is 41.8, almost 40, that's supposed to mean in the coming few months the prices will fall. Prices are likely to continue falling. This means coming in the CPI, you can expect this change to be reflected. This percentage change will be reflected in the CPI. So having realistic expectations, but anyway, we'll come to that when I'm talking about the forecast for next week. Now that's done, I believe I have talked about both the services and manufacturing sectors, employment index, and the prices index. Overall economy, services sector growing faster. On Tuesday, that was Monday, ISM manufacturing PMI. On Tuesday, the Reserve Bank of Australia interest rate decision. For this one, they kept the rate constant as opposed to what the market was expecting. The market was expecting an interest rate hike, but the Reserve Bank of Australia decided to keep the rate constant. That was a hawkish pause. As you can see here, on Tuesday morning, the Reserve Bank of Australia left its key rate at 4.1%, somewhat surprising markets where expectations of 25-point increase were relatively high. It was a hawkish pause with the warning of its intention to raise the rate further in the coming months. So it was a pause, but we're not out of the woods yet. The next month, it might be an increase. Going to wait for that one and see. Here on Wednesday, we got the FOMC meeting minutes. Let's look at, there was a summary here. The FOMC meeting minutes showed that some participants favored or could have favored a 25 BPS hike, noting the tight labor market, stronger economic momentum, and little evidence of inflation on a path to 2%. The Fed staff saw mild recession as likely later this year. You can check that on the Federal Reserve website. It's not loading. Drop the link in the description. You can go to the website and see the report for yourself. All participants stated that upside risks to inflation might become an uncovered. Overall, there's nothing really new that we haven't known already. Yes. So in the minutes, there was nothing new. It was just the same story. Continuing on Thursday, ADP non-farm employment change got them here. June 2023 change in private payrolls 497,000 jobs. This number almost 500, which was over double the estimate. Did a good job in sending a false signal to the markets that the employment numbers would be strong, as we will see later as I continue. So you see here the leisure and hospitality sector was the strongest. Even last month, even the preceding month, for April and May, we've seen the leisure and hospitality sector is usually the strongest in these ADP reports, and they serve a good job. They do a good job in trying to predict what's going to come in the NFP. But this time, this was a hoax. They lied to us. Okay, this number was true, but they lied to us about the strength of the labor market because it wasn't reflected in the NFPs. Service initial jobless claims 248k versus the 245k estimate. The jobless claims here show that the jobless claims here, the overall trend, they are generally increasing, and probably this coming month we're going to see the numbers stabilize above 250k. Maybe I think we'll see that. Something else on that, the services PMI, the ISM non-manufacturing PMI. This is also the ISM services PMI. I believe we have talked about that here. Continuing, JOLTS job openings. This one came in below estimate to show that the demand for labor is lower than expected. This enforces the narrative being shown by the jobless claims. Jobless claims, remember, they are on a steady increase, and you can see here even job openings are slightly reducing. As we have seen even in the PMIs, let's go back here a bit. As we have seen in the PMIs, the employment indices, for this one it was a big increase, but for the manufacturing sector it was a decline. That's why even in the job openings, the numbers are falling. There are less opportunities available for the unemployed. Continuing, Friday, July 7th, this is where we got the non-farm payrolls. And as you saw in the separate video, the link should be popping up somewhere. I talked about these numbers and how this whole thing affected the markets and what we're going to expect moving forward. That's it for the week. I'm going to look at the other news that happened during the week. This is the one. Saudi Arabia, Russia deepens oil cuts, sending prices higher. This was on Monday. Yes, it was on Monday. Saudi Arabia and Russia, while the biggest oil exporters, deepened oil cuts on Monday, sending prices higher. Despite concerns over a global economic slowdown and possible further interest rate increases from the US Federal Reserve, Saudi Arabia said it would extend its voluntary oil output cut of 1 million barrels per day for another month to include August, adding that the cut could be extended beyond that month. Shortly after the Saudi announcement, Russian Deputy Prime Minister Alexander Novak said Moscow would as well cut its oil export by 500,000 barrels per day in August. Very, very political. Of course, this is geopolitics. US supply, but so far has failed to move the much from range $78 per barrel. Okay, as you can see here, this is all just politics, but it's going to affect the markets in the long term, especially the oil prices. You can expect the oil prices to go higher now that the supply is being limited further for another month. Also this week, BlackRock CEO, you know BlackRock, of course you know it. This guy who once called Bitcoin an index of money laundering. Today, this was on Wednesday, yes, said the oldest and biggest cryptocurrency was digitizing gold. Billionaire's comments in a Fox Business interview Wednesday came weeks after the world's largest asset manager priced US securities index ETF to spot Bitcoin ETF. I do believe the role of crypto is digitalizing gold in many ways. Instead of investing in gold as a hedge against wondrous problems of any one country, let's be clear, Bitcoin is an international asset added. So that was it for the week. This is something else to do with geopolitics. US to give Ukraine widely banned cluster munitions, despite fears banned by many countries. Cluster munitions leave unexploded bombs that pose a risk to civilians for decades to come. Okay, the war in Ukraine. We don't even know if there's actually a war going on right now, but knowing Russia and its history, yes, it's very likely that the war is still happening. Those guys are not quitters. So the US is willing to send $800 billion package. It was. I don't know if it's. I can't see that figure here, but yeah, the US said they're sending these bombs over to Ukraine to help them win the war, and they're defending themselves, arguing that US-made cluster bombs are safer than the ones Russia is already using in the conflict. That's how they're defending themselves. Anyway, this is all politics. I've already talked about the important stuff. Watch my next video on the weekly forecast. It's coming.